Welcome back. You're watching Traders Corner, and this is the final show of 2017. And joining me, as always, as he has done throughout the year, is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, I suppose the best thing that can be said for 2017 is that it's winding down to a rapid close.
Yeah, that's right. It's been a tough year for me on this show and for a lot of others out there, I think, in the market. It hasn't been an easy year. And of course, it's had the nasty little sting in the tail with Steinhoff and EOH recently, which I know has caught a lot of retail traders off guard. So what was a pretty tough year anyway has certainly ended on a tough note as well.
Yeah, although having said that, we've of course had this stonking great Cyril Ramaphosa induced rally over the last couple of days, and I guess we'll get to that a little bit later in the show. But how did the portfolio ultimately fare? Because we took a little bit of a break last week. We had a pre-recorded show. So where did things actually square off in the end?
Yeah, that's it. So we put out the numbers in last week's show, and they're pretty much as they were then. So I've got that same slide up on the screen at the moment, which shows, you know, where we were at the start of the year and where we are at the end of the year. So just to recap, we began the year with 100,000 Rand in a local portfolio, and we put 10,000 pounds into an offshore portfolio. So collectively, those two were worth about 266,000 Rand. By the end of the year, the local portfolio had grown by 14.5%, so that was decent enough. The offshore portfolio, I've had a nightmare the whole year pretty much, and we were down around about 10% in pounds. But with the Rand having moved weaker over the course of the year against the pound, it meant that we still ended up making some money. So net, if we translated everything back, we had 277,000 Rand in the account at the end of the year. So that means we've made just short of 11,000 Rand in profits in total, which is then going to be donated to charity. So it's certainly nothing to scream too loudly about like we've had in the previous years, where I've had, you know, great performances of 40 to 50% per annum. This year's been nothing like that. It's been a very tough year, but at least there's something, and that money is going to be going to the same charity that I donated to last year. It's a school that I'm involved with. It's the Monaghan Farm Montessori School, and there's a bursary program that we run there. A couple of kids that rely on bursaries, so that money is going to go into the bursary program to help those children.
Yeah, look, anything helps, I suppose. Garth, but one of the reasons why we have done this show, the last of the year, is because you had a couple of open positions, in the sense that there was a futures closeout and also your option structure against the US markets. There was a little bit of hope that the US markets might pull back a bit, but they didn't.
No, it hasn't. I mean, the S&P 500 continues to grind higher. It seems to be taking heart from the US tax plans over there. So the S&P 500 is knocking on 2,700 now. It's looking strong. And also our local market, although it's pulled back, the option structure, which expires this week, Thursday, is definitely not going to expire in the money. So we pretty much kissed the premiums goodbye on both of those option structures. And you know, lesson learned, I guess. We've struggled with the options this year. In any normal year where the market would have had a few more deeper pullbacks, then those option structures would have worked, but that's not been the case this year, particularly on the US market. And that's where I've got 4 out of 4 option structures wrong on the S&P 500 this year, purely based on the fact that there's just been no pullback whatsoever.
Yeah, and I suppose if you want 60% winners, then that was, I mean, I don't want to call it disastrous, but you know, it wasn't great, and something to work on, I guess, in the year ahead.
Yeah, it definitely is. I don't think it's disastrous. I mean, I think Steinhoff is disastrous, and we managed to avoid that. EOH is disastrous. We avoided that. So, you know, it could have been worse. It really could have been worse, but certainly it could have been a hell of a lot better as well.
Okay, well, let's talk about highlights, because there weren't many, but there were a couple this year. So what, for you, would you isolate as things that you were relatively proud of?
Yeah, so I'm going to look at 3 trades that we did during the course of the year on the local market that worked out nicely for us. And then at the end, we'll just look at something that's a bit more current. We'll look at the top 40 and the Rand exchange rate. But now here we've got the chart of Naspers up on the screen. Now, we did a trade back in March of this year where the stock at that stage had been trading in the sideways channel for about 2.5 months. And it had bounced off this lateral support at 2,100 Rand and begun to move higher. When it moved above the 50-day moving average, I took a view and I basically preempted a breakout above the top of that trading range. So we went long of 30 CFDs at 2,165 Rand with a stop loss below the bottom of that channel at 2,100 Rand. And that worked out quite nicely. The stock rallied. We actually had an initial target of just 2,300 Rand here for a short-term trade, but I decided to lock in, to stick with the trade and let it run. And if it traded below a 2-day prior low, then I would exit. And that allowed us to actually stay in the trade for a while longer beyond our target level. And eventually that trailing stop loss was triggered at 2,448 Rand. So it meant that we made 8,200 Rand of profit, and that was our best trade for the year. It was the most profitable trade. So although it worked out well, it's also no secret that Naspers continued to run very, very hard from there on out, and it's gone up beyond 4,000 Rand during the last couple of months. So a pity we didn't stay with it, but you know, it's one of those things.
I mean, at the time that you exited the trade, you were quite happy that you did, if I recall correctly, because it had pulled back a little bit, and you thought, in keeping with a year that's been quite tough to run profits, you felt that it was the sensible thing to do. I mean, if you look at the technical charts now, would you just say, actually, it was just a temporary pullback, really, and it set Steinhoff up for a next leg higher, which it often tends to do. It has these periods where it just kind of consolidates or pulls back a little bit and then goes off on another leg up.
Yes, Naspers, by the way.
Not Steinhoff.
But yeah, you're right. Look, there was only a day or two, or maybe 3 days, where I looked and thought, well, I'm glad I got out, and then it's continued to move higher since then. I think if there was a lesson here, possibly running that trailing stop loss, maybe I had a little bit too tight with the methodology that I was following, and perhaps like maybe using a slower moving average, perhaps a 15-day moving average or something like that might have been more suitable to try and stay in this trade and ride out the longer term uptrend. But again, I mean, at that stage, it was very stretched. It had run hard from 2,100 Rand up to 2,500 in a straight line without any pullback. And it seemed at that point like there was some profit taking beginning to emerge. So it seemed like it was the right thing to do to bank some of those profits. Of course, in hindsight, I should have just stayed long, but always hindsight is an exact science.
Yeah. What other trades, Garth, do you think were noteworthy?
So we had Clicks, which we traded in August. Now, this has been the strongest retail stock on the JSE this year, and it's defied all the others. I mean, if you think a lot of the other general retailers have been pretty weak and have struggled this year, they've only now started to perk up a little bit in the last few weeks. Clicks, on the other hand, has been trending steadily higher throughout the year. In August, we identified that brief pullback to the 50-day moving average, and you can see that on prior occasions where the share price had pulled back to the 50-day moving average and towards that rising upward trend, buyers had stepped in and taken advantage of the weakness to buy the share and push it higher. So we did the same. We went long of 550 CFDs at 143 Rand 60. Stop loss was 141 Rand, so basically looking for a move below the upward trend effectively to trigger a stop loss. And it wasn't a trade that I was looking to try and extract a lot out of. We were just looking for a move up to 150 Rand, which effectively was back to the previous top. And it managed to do that within a few weeks. It got to the previous top at 150 Rand, so we banked our profit there and took 3,500 Rand in profit. Again, it's one of these that has continued to move higher, and it's now trading up north of 170 Rand at the moment. So once again, it might have been prudent to stay with this trade, but you know, it's easy in hindsight.
Especially considering that how weak the retail sector as a whole has been, how weak the consumer is, and yet Clicks and Dis-Chem have both had this phenomenal rally this year.
They have, and they both got similar defensive qualities involved in the pharmaceutical space, both businesses that are growing their footprint quite aggressively as well. So they certainly are somewhat immune to a lot of the economic challenges that are facing the likes of the apparel retailers, for example. And you've seen that in the share prices of both stocks this year.
Any others, Garth?
The last one that we look at is Kumba, and this was a more recent trade. We did this one in November. So you can see the upward trend quite clearly evident over there. What had happened over 2 weeks in November is that the share price had formed this little flag-like consolidation pattern. And on the move above 300 Rand, I figured that was a bullish breakout to the upside, and we took advantage of that. We went long of 100 CFDs at 301 Rand with a stop loss below 290, and then we were looking for a move to 330. It got to 330 fairly quickly, and you can see that it did encounter a bit of resistance at that 330 area for a week or two, but eventually it's continued to push higher. But nevertheless, we took profits at 330. We banked 2,700 Rand on that trade. So another one which was a good memory for me in terms of looking back at 2017.
Yeah. Okay. So they're all trades that you could have run a little bit longer, but while you're in them, it's impossible to gauge, whether they are going to be winners that have sort of more legs than just a short-term bounce.
Yeah, that's it. Look, the old adage is always that you must run your profits and cut your losers quickly. And that's very true. But at the same time, there have also been a lot of examples this year where you've tried to run your winners and then you end up giving away all the profits that you had. So it's difficult to know exactly when is the right time to continue to run a profit and when not to. As I've said many times on the show, getting a decent entry is something I feel I'm fairly good at. Executing a stop loss I can do with my eyes closed, but knowing the right time to sell is still the most difficult part of trading. And you're always either going to sell too early or you're going to overstay your welcome and sell too late. So it's a difficult one to get right. I guess generally speaking, if I'm making profits on trades and decent profits, then I'm happy. Even though we could have made more on those trades.
Yeah. So Garth, that moves us then to the current picture, which is so two charts that you'd like to bring up at the moment. And the markets certainly have been very interesting in the last couple of days, what with Cyril Ramaphosa's victory, but also the ANC top six being a very divided top six, and still elements of the Jacob Zuma taint therein. So I wonder how long the rally is going to last on the all share.
Yeah, it's a very good question, and we'll see. It's certainly interesting times to be living in South Africa. It is always interesting, but it's probably a little bit more interesting than normal at the moment. I'm looking at the top 40 future here. This is a daily chart. Now keep in mind this is the December 17 Aussie future. So the futures closeout for this contract is this week, Thursday, the 21st of December. So after this, we would then migrate over to the March 2018 contract. But from a technical perspective, what I'm interested in here is the fact that this index has actually pulled back quite sharply over the last couple of weeks. It's pulled back 4,500 points. And that's largely been driven by weakness in Naspers and also to a certain extent Steinhoff's weight on the market a little bit. And the strength in the Rand and Richemont, and the strength in the Rand. The strength in the Rand really has been the major driving factor behind why this market has come off the way that it has. But what's interesting is that if you look at these tails on the daily candles here, there's long tails to the downside, which implies that there is buying activity happening at the lower levels. And today's trading action is interesting in the sense that it's now begun to break the downtrend of the last 4 weeks or so, following the announcement that Cyril Ramaphosa is the new ANC president. The domestic stocks in particular are very strong. So the banks and the retailers and the SA incorporated stocks are really pushing the market. So that technical break above the downtrend is bullish. Also, the positive divergence that we're seeing on the RSI at the bottom here is also an indication of a potential rally to come. Now, there's a gap in the chart at 53,000, and often those gaps do get filled. So we'd look at that as a possible target. If I just quickly take it to the hourly graph here, which is now zooming in a little bit more on that recent trading action, there you can see the downtrend illustrated, the break of the downtrend illustrated more clearly, and there's the gap at 53,000 that we'd be looking for. So if there's to be a Santa Claus rally in this market, then I think that's possibly where we're going, and I'd be looking for a move to 53,000.
And as you say, the Rand dollar is absolutely instrumental to the SA Inc. rally taking place.
Yeah, it is. So here's the Rand dollar exchange rate at the moment, and you can see this very, very aggressive move stronger over the last few days. That's been driven by the expectation that Cyril Ramaphosa was going to win the ANC presidency. There's possibly a little bit of a buy the rumor, sell the fact type of scenario that's now playing out, and the strongest levels of the currency actually were just before Cyril Ramaphosa was elected. So, and it's weakened a little bit since then. Technically, there's a head and shoulders pattern evident over there, and that points down to about 12 Rand 30. So, it could still go a little bit stronger from here, but I think the bulk of this move stronger has happened. And I also just say, always keep in mind, we've mentioned this year after year after year on the show, but January is typically a seasonally weak month for the Rand. So I won't be too surprised if this strength does see somewhat of a reversal in January. And for those that are wanting to send money offshore, perhaps this Rand strength is actually the opportunity to do so.
Yeah, and then just to very quickly wrap up, Garth, as always, viewers can get a weekly alert as to what's coming up on the show, which of course will be in 2018.
Yes, that's right. So if you go to traderscorner.co.za, you go to the middle of the page, there's a link there where you can click on the free weekly email link. It takes you about a minute to register your details, and then we'll send you an email every Tuesday which details what is coming up on the show for that week.
Yeah, well, we'll leave it there for tonight and also for the year. Garth, thanks as always for joining us. It's always illuminating and informative, and it's been a tough year, but I think we've all been behind you, so thanks very much.
Thank you very much.
Yeah.
Thanks.
Garth McKenzie is founder and editor of Traders Corner.